But we do have some stocks that you want to be watching here this morning, Mr. Sazi. And want to start, first of all, with what's going on with Nike. Now, we talked about the earnings going into the report and the fact that Nike is a strong brand that has strengthened further over the course of the pandemic. And that was evidenced in these numbers, right? Record quarterly sales, revenue almost doubling in the quarter, direct sales also rising. This is really interesting to me, this direct channel, Brian, that Nike has both in its own stores and online that has been strong for it. The one spot of weakness was China, but investors don't seem concerned, do they? The shares are really pushing higher in pre-market trading. You see their digital sales up 41%. What stands out to you from these numbers?
One word for this quarter from Nike, given its scale, over $211 billion market cap, bananas. A truly bananas quarter from a company the size of Nike. The stock is now up 15% pre-market here. The Dow component, I will add. It's just you don't see this very often from a company this size. I mean, the Jordan brand in the company's most recent fiscal year, which ended in this quarter, sales up 31% to more than $5 billion. That is amazing for a brand that has been around pretty much for as long as I've been around on this planet. So to see that strength there is very important. But the reason why you're seeing, I think, the stock up as much as it is the guidance. Nike said on the earnings call they're going to cross $50 billion in sales for its current fiscal year. That would be the first time that has ever happened at Nike. And to get there, they're looking for a sales increase of low double digits. This is not an upstart company. It is Nike. So to see these growth rates is simply, it really is eye-popping. And I will also add, too, look for some action here in Foot Locker. Foot Locker shares up about 5% in the pre-market. They got a positive shout out on that earnings call from Nike's management. That is the first time Foot Locker got shouted out on a Nike earnings call in more than a year. So a good day for Foot Locker.
Yeah, and some of the European competitors and U.S. competitors like Under Armour have been moving higher, too, with this sort of halo effect from Nike. It is going to be really interesting, though, to watch China because the company saw 17% sales growth there. That is disappointing versus what analysts had been estimating. What's impressive is that, to your point, Nike has this forecast for growth this year, even with that China piece not sort of firing to the level that was in the expectation. So, Brian, we'll have to see if there's some acceleration there also as the year goes on.
Yeah, and also let's keep in mind, what we haven't mentioned in this 2-minute chat so far is the Olympics. So Nike will likely see another boost as it releases more Olympics products into the market, as it has already started to do. So that is another win for a company that is clearly already on fire.
Yes. So let's talk about another company that reported earnings, another biggie. This one is FedEx. Now, the company's earnings per share came in at $5.01. Sales up 30% to just over what analysts have been anticipating at $22.6 billion. The company's forecast, though, not just for its earnings, but also for its spending, seems to be a little problematic for the stock here this morning, Brian. CapEx going to go up more than 20% during the fiscal year for 2022. And that's, I guess it's sort of a good problem to have, right? They have a lot of demand and they need to improve their capacity to meet that demand. But it seems like the street is not super psyched about all of that.
Not super psyched indeed. And so their CapEx this year will go up about 22% year over year. And you hop onto that earnings call, you see a company that is investing aggressively for the future of e-commerce. This year alone, they'll open 16 new automated sortation facilities, basically a big giant facility that sorts your packages in the hopes of getting it to you on time. Also worth noting here, FedEx founder Fred Smith, and I tweeted this out, his comments earlier this morning on my account, really warning about the labor shortage. And if you're an investor in FedEx here, you are concerned if a FedEx can meet the peak demand, let's say during the holiday shopping season, because it can't find human bodies to get on these trucks and deliver these packages. That's a major problem for FedEx and obviously also a UPS. Also, finally, FedEx noting also that the peak surcharges are just, quote, a new normal. So look for more price increases from FedEx and, you know what, probably a UPS as the year moves along because they're seeing their costs go up.
Yeah, definitely. It's interesting as we talk about these companies, Nike versus a FedEx. It also kind of reflects the broader struggle that we are seeing in the market now between growth and value, and sort of what it's going to cost to continue at the same pace of growth for some of these companies. That's really been in focus this week. Yes, we've talked about the Fed. Yes, we've talked about inflation, but we also have talked about the sort of changing priorities for market participants over whether they want to keep putting money into the reopening trade, how much momentum that is going to continue to have versus going back into some of the big tech heavyweights that have been doing so well. And that's also, I guess, reflected in the fact that we've had both records for both the S&P 500 and the NASDAQ this week, that, there's this sort of desire on the part of investors to, I don't know, maybe dabble in a little bit of both. We are going to pause here for the opening bell, which is happening imminently. Mr. Car Wash, we got a kick out of this one this morning. Didn't know this was a public company. Don't know about this company, but obviously we know what it does. Mr. Car Wash
They clean Lucid.
The opening bell this morning. I really wish they would have changed the podium there at the New York Stock Exchange into a giant car wash. That would have been fun. And At the Car Wash, of course, is on the soundtrack this morning as we see this. Oh, they're having their IPO. There you go. All right, let's move on to some other movers that we're watching, because you've only done 2 of the 4 that you teased going into the last break. Netflix getting an upgrade over at Credit Suisse. Talking about subscriber growth sort of stabilizing here, Brian. And this is one of those companies I was just mentioning where, you had seen a little bit of rotation out. The shares, though, are trading higher this morning.
Yeah, interesting here. So Credit Suisse, and I would imagine you'll see other brokers start to come out with their Netflix earnings preview notes, and we're getting ready to go into our earnings season. Really, Credit Suisse saying the release schedule for Netflix is looking strong in coming quarters, as it should. This company is spending billions of dollars to create original content. You would expect their releases to look very strong. But, Julie, look at the stock price on Netflix. Only up about 2% on this upgrade. Year to date, Netflix shares are about up 1% right now. The NASDAQ's up 13%. So there's a lot of nervousness on Netflix coming into its latest earnings report, because I think the street's concerned. Can they continue to grow at the rate they did during the pandemic? The answer is probably no. And if that is in fact the case, can they grow year over year this year off the strong growth rates of last year, or do they see declines? That is not what you'd want to see if you're a Netflix investor.
Yeah, definitely not. And then to a stock where growth doesn't really matter, at least not so much. Talking about AMC, of course, back in our meme stock wheelhouse that we've been talking about frequently. Adam Aron, the CEO, on Twitter yesterday, encouraging shareholders to vote for the authorization of 25 million new shares being issued. They can't be issued before January of next year, but he says, don't be afraid of dilution. So continuing in what he has been doing in speaking directly to shareholders and sort of lobbying for what he wants, Brian.
How do we put things here on this show, Julie? Adam Aron is going to Adam Aron. This guy has shown consistently he's plugged into this retail community, enjoys the spotlight. He's going to continue to try to take advantage of their appetite to own AMC for whatever reason, to raise cash, to go out there to buy defunct movie theaters and build up the company's position in a post-recovery world. And while I have you here, our producer Val putting in here that Mr. Car Wash that just opened the bell, it's being valued at $4.5 billion. That's impressive.
Why not, right? Or by the way, Adam Aron, to put it another way, to use his internet nickname, Silverback's gonna Silverback. Did you know that was his nickname, Baz?
No, I thought it was Ape. I thought it was Ape.
That would be good too. All right. And then finally, a quick extra credit one that I'm going to sneak in here. That's Virgin Galactic. It's up almost 22% this morning. The Federal Aviation Administration said that the company can fly to space. It gave it the okay to do so. This is after the test flight, remember, that it did on May 22nd. So this just confirming what we knew here, that the company is going to be able to fly people to space. Pretty cool.